Hello, and welcome back to the Strange Water podcast. Thank you for joining us for another episode. All across the history of modern finance, we have dealt with investment cycles characterized by irrational exuberance and moral eroding greed. Crypto takes this phenomena to a whole new scale, both in terms of the sheer size of the bubbles that we create and in the speed in which we cycle through them. And regrettably, we also create some of the most cartoonish examples of fraudsters and charlatans. Let's look back at the last cycle, where we can name at least a dozen people who went on a main character arc and ended up in prison or running from the law after 10-plus figure scams. But let's focus on two in particular, Kwon and Alex Mashinsky. Kwon was the cult-like leader of Terraform Labs, the company responsible for Luna and UST. UST was launched in 2020, and by May 2022, had grown to a circulating supply of over $18 billion, while the Luna token was valued at around $40 billion. Alex Mashinsky was the founder and CEO of Celsius Network, a crypto lending company that boasted over $20 billion under management and hundreds of thousands of global customers. Both of these men built enormous businesses that stood at the very center of our industry during the peak of the last cycle. And both of these men are not only remembered for their violent crashes, but are generally held responsible for the end of last cycle. And these are not just embarrassing professional failures. Both Kwon and Alex Mashinsky have been arrested and face trial for federal crimes and long-term prison sentences. For as long as they will be remembered, the names Kwon and Alex Mashinsky will be forever associated with fraud and failure. But that is only from today's vantage point, after we all know and paid for what happened. But back in 2021 and early 2022, these men were titans, and the companies they led were the most exciting projects in crypto. Today, we're going to look back at those times before it all fell apart and remember what it felt like to be working with the great heroes of the post-COVID cycle. McDavid Stoddard is the growth lead for Aperture Finance. During the last cycle, McDavid and Aperture were working with both Terraform Labs and Celsius Network to build projects, service clients, and grow their businesses. During the next hour, we walk through what it was like to work with these cursed projects and how these experiences felt when the collapse finally came. While this is an incredibly interesting walk down memory lane, it's not just an old battle story. It's an important reminder of what's coming during this next cycle. One more thing before we begin. Please do not take financial advice from this or any podcast. Ethereum will change the world one day, but you can easily lose all of your money between now and then. Okay, let's bring on McDavid. McDavid, thank you so much for joining us on the Strange Water podcast.
GM, thanks for having me.
Of course, man. So I'm so excited for this conversation. But before we really deep dive into it, I'm a big believer that the most important part of every conversation are the people in it. So can you give us a little bit about yourself, your background, and how did you find this kind of absurd industry?
Yeah, for sure. So I'm McDavid. I am heading up growth, product, BD related stuff at Aperture Finance. Been there for since basically the very end of 2021. So I've witnessed a couple different meteoric rises and collapses within crypto. We can get into that later. And yeah, I've been in tech my whole career. And just prior to actually going full time into DeFi, I was at a news app where I was heading up sort of Web3 exploration project for them, and the project was very interesting, but I could tell the company wasn't very serious about it. So I was I need to just go full time into the industry, and I live in the Bay Area, so it was fairly easy to get plugged in with some of the builders down here.
Cool. Makes a lot of sense. And so it sounds like you've been at Aperture since like your whole, I guess, like jump into DeFi. So can you talk a little bit about like when you're transitioning from this company that you can tell like aren't really that into the thing that you're super into? Like, what are the types of stuff you're looking for? And I guess like, spoiler alert, you ended up at Aperture, but like kind of how did that happen?
Yeah, I mean, it wasn't like I had some like super long, drawn out job search and I had like 10 offers and was like strategically picked Aperture. I basically kind of just started like, um, my girlfriend said at the time I was like manifesting it, but I was sort of just like, yeah, I want to like pivot into crypto. And I started just like telling people in my network this. I never actually applied for a job. I just sort of like when I was catching up with people, I'd be like, yeah, like I'm looking to just like get full time into crypto. And just saying that out loud kind of like, this Aperture job kind of like shook out of my local network. Like a ex-colleagues, a friend of an ex-colleague was, plugged in with the company and made the introduction. And I was kind of like, yeah, sure. Like they're local, like let's do it. I had no, at the time I wasn't like, Aperture, we were building these like structured product vaults at the time. That wasn't like some thesis I was bullish on per se. It was kind of just the opportunity I liked the team, that it was close. So I was like, yeah, sure. Like kind of just aped in, as you would say.
Nice. Yeah. I mean, and I think there's probably a lesson in there about like finding something that you're passionate about. And like, we say it with a laugh, but manifesting is like a real thing. And I guess like it's more the converse that's the true thing, which is like if you want something, but you're not manifesting it, like it's just not going to happen. So, kudos. And, like for all of our sakes, I'm glad you made it into the industry.
Yeah, yeah. Yeah, me too. It's been like going back to my girlfriend, when I first joined, she was like, yeah, you're kind of like getting in bed with the dragon going into crypto. Like you just don't know if you're going to be riding on the back of this thing or getting like fire spewed at you. It could go either way. Both things could happen at the same time. So she was definitely right about.
I think that's like the perfect frame your girlfriend gave to us for this conversation, which is like she's absolutely right. Like crypto is like trying to ride a dragon where like we can soar really high and like conquer the world if we do it right, but like every single second is an opportunity to like get burnt or to fall off the back or to like find catastrophic failure. And so over the next like hour, I really want to talk about like some of these moments and what it was like to be like so close to the maelstrom and survive through. But I think like we'll start our story in 2021 when you're joining Aperture. So like I want to kind of like put us in that mind space back then. 2021, I guess, depending on the point of the year, was like probably a pretty exciting time. And this is like really the moment where like SBF is like reaching his like most iconic and
Yeah, the height of his powers.
exactly like Celsius and like the centralized lenders, like they just seem like they're running a good business, and like we're all just feeling like a little bit like dumb and slow for not doing that. Like can you talk a little bit about as you're entering DeFi and like now knowing what's going to come, can you just like give us a little bit about into your understanding of the space? Like did it feel like as sketchy as it ended up being? Like how did you feel when you started Aperture?
So the Aperture team, the three like initial team members all came from big tech in the Bay Area. So there was two engineers at Google, and then the CEO came from I think he was at Amazon at the time. It was his last Web 2 job. So it's a very like Web 2 background that the team had. But through some just like chance networking and connections, that we got really plugged in with TFL, the Terra, the team running Terra, the blockchain at the time, and that included like Kwon, who was actually like a seed investor. I mean, he never actually paid us, so like I don't think it was valid. But like I think there was a SAFT out to Do Kwon at one point. And we were in some group chats with him, and our kind of initial idea was, you know, team has a very strong technical background, so we're going to leverage that to build some of these like automated vaults on chain. At that time, DeFi was still pretty crazy with all this like Ponzi yield going on. All these like emissions were like that was the peak of DeFi emissions. I think emissions today are still pretty prevalent, but it's not nearly as egregious as it used to be, even like a year and a half ago. So we had kind of settled, like I show up, I have all this like, general marketing and business development experience in Web 2, but I show up and I'm thrust into trying to like market and explain this like kind of complicated structured product that we were running on Terra. So for any listeners out there that were active on Terra Classic, you probably were, I mean, you definitely were familiar with Anchor Earn, at the very minimum, which was that like super unsustainable yield they were paying out on UST. It was around 19% for most of its history. Um, but one thing, I mean, a lot of people in Terra I think were familiar with this, but there was another project that the first time actually Do Kwon ever got in trouble was for this other project that they were running called Mirror, which was like these synthetic stock assets, like, very obviously problematic for a number of reasons. But the way those things worked was there was like a farm token that would incentivize people to short or long the asset, and that farm token, like the weights of the distribution of it were kind of dynamically updating to keep the asset close to the peg of like what the real world asset was trading at. Um, so for legal purposes, I will use a somewhat more kosher example. Like one of the assets on there was just like even Bitcoin. So there was a synthetic version of Bitcoin that like was pegged to the price of Bitcoin by this like emission schedule and mirror. Anyways, the point being, like we basically created this delta neutral vault where the user would come in and like deposit like 2/3 of your initial position would go into Anchor Earn. You would take out AUST, which was like a receipt token from Anchor Earn. You would use that to short an asset on Mirror. And then you would use the other part of your capital that you had not deployed at the start to long the same asset on Mirror. And the like end result was you had like all these like random like absurd emissions from various activities. So you were getting yield from Anchor Earn, not sustainable. You were getting emissions from Mirror for shorting and longing the asset and providing liquidity on the asset, not sustainable. And there was also like I think an additional emissions token from the compound we were using to like auto compound the LP position. So it had like this absurd like laundry list of yield points. And so my first initial like foray into DeFi was like, oh wow, like this is kind of absurdly complicated. But people at the end of the day would just see this like end yield number, which was higher than Anchor Earn. So the end yield for the strategy was like 35 to 50%. Um, and uh, the strategy was also pretty well known in the Terra community. There was like lots of YouTubers showing this strategy, and a lot of people across the industry. I think basically all the major, blow-ups from the 2022 cycle had some exposure to Luna or Anchor Earn or both. And that includes like Three Arrows they had exposure. Celsius had a ton of exposure, which I know firsthand because we like worked closely with their DeFi team as they were vetting our vaults and putting in like starting to like deposit money into them. Um, so this was a very like I think this was the most important ecosystem in 2022 because it was kind of like the canary in the coal mine for all the collapses that happened. Like often all the stories you see of the major blowups from FTX, Three Arrows, Celsius, they all kind of started with the Luna slash UST DPEG. That was the thing that kind of sent the dominoes tumbling. Um, and yeah, so like we launched this thing in Aperture. So I've been there for like less than 2 months at this point, and part of that I was only part-time because I was kind of like still had a foot in job A for a while before I switched over full-time. And like 2 months into this thing, we went from like being a nobody to having 120 million of TVL um, just a few weeks after launching, which was just like an insane roller coaster. At that point, we're like eyeing TGE like a few months later, like we're, tripling the whatever the last valuation was from the fundraising round. Like we're going to easily clear this number in our TGE, and everyone was just kind of like, we were on the good part of the dragon ride, so to speak. Um, and yeah, it was during this time like we are like, in addition to the vault being really solid and having good product market fit, we were getting like retweets from Do Kwon, and like we're sending him updates in the chats, and he was just like very uh pretty point and shoot at the time with like any Terra project, I think. Like basically, I think he had a a piece of every single project that had launched on Terra at that like juncture. And for him, like really anything, it makes sense. Like anything on the chain that does well is like ultimately was good for them. Um, so that was like quite crazy too to see like one of the biggest, immediately jump into this industry and you see like one of the biggest, most controversial figures on crypto Twitter like shilling your platform. And you like immediately seeing like a huge upswing in usage right after that happens. So that was all pretty crazy. And then of course, like we're also now, the Celsius team has like started to reach out to us because they want, they have a DeFi team. So I could go a little bit more into that if you want, Rex.
Yeah. No, let's for sure go into that. And I really want to get to this moment where the dominoes start to fall. But while we're still talking about this moment, I would love for you to answer the same question from three different perspectives. The perspectives being like the general community, you guys, Aperture, as like people building in the community, and then I'm going to ask you to think like on behalf of TFL and Do Kwon. But like during these early times before the musical chairs stopped, like how well understood do you think it was that like this is like so incredibly rickety and like can't last forever, or how much of it, and again from the three different perspectives, felt like yeah, this is obviously a little crazy, but like there's something real here, and like if we can grip onto the dragon, like we're going to make it through on the other side with like real game-changing technology.
Yeah, this is a great question. Um, Basically, to summarize, is like if you look at all the major vested parties in the Luna ecosystem, how many of them were like somewhat aware or fully aware of like the like utter risk of this algorithmic stablecoin and the unsustainable anchor yield payout rate? Um, so if you start, I'll start with Aperture. So I think within Aperture, we were to be honest, like pretty naive. And for good reasons. Like we're all new to the space. Like everyone's kind of left Web 2. We've gotten on the crypto rocket ship, and now like boom, Do Kwon retweet, boom, TVL 0 to 120 million in like 60 seconds, and we're all like seeing our bags pump before our eyes, and so we're all like drunk off the insane product market fit growth story that I don't think we were being. Uh, I mean, we even like to back this up. We had a large portion of our treasury, a very large portion of our treasury was in UST. Um, so that shows you that we were not like even remotely considering. I would actually put us at the bottom of this list. Like the most blinded group was our own team, which sort of makes sense. Like you're a startup. You gotta be long whatever thing you're building on.
Yeah, and I guess like as a developer, you're like just as long as the community of the investors, regardless if you put money in. Like you're just as long, but you're even more so because you've like bet your career and your protocol and your company on the specific technology. So it wasn't until you just said it, but like you're totally right. Like the bottom, or I guess like the most zealot, but also means most blinded, probably does fall to like the actual developer and the project level.
Yeah. And you see this like if you read the Michael Lewis book on FTX, like I feel so bad for those employees. They probably got the most turbo fucked out of everyone. Because they had both their like career and their own brand was tied up in this thing, as well as all of their personal finances. Um, Uh, but yeah, anyways, back to Terra. So like that's Aperture. We're heavily exposed, including our own personal money. I had a ton of money in this vault myself. I was like 30% yield. Why not? Like, sure, I'll move a large, like, dumb amount of my savings into this vault. Um, but if you look at so I'll talk about the community next. 'Cause I feel like that's the thing I'm the second most educated on. TFL is a little bit of a black box, but we'll get to that. Um, if you looked in the community, I felt even within the like Terra diehards, I would say a healthy portion, maybe even up to half, were kind of sus about either the anchor earn sustainability or the potential risk of uh, a death spiral with UST. I read quite a bit of content in Q1 2022 about these pundits, this kind of like crypto like think boys that were posting like like doom scenarios for UST. Um, and I feel like yeah, within the community, it sort of seemed like there was like there were definitely everyone was getting drunk off the Kool-Aid, but half of the people that were getting drunk were kind of like maybe we should stop drinking this kind of soon. You know, like there was some trepidation.
And sorry, just to interrupt you a little bit here, do you feel like that trepidation with let's call it half of the community, do you think that came from this like true understanding of the system and the vulnerabilities, or do you think it really came from just like standing in the corner of the party and watching that it's starting to get like really manic and like, oh, I see that like these guys that are dancing like right by like the candle station and these guys are like tossing around gasoline and like I don't really know what's going to go wrong, but like I can just tell by the energy that like I probably need to be ready to dash for the door. Like what sense did you get for like why people were starting to get bad vibes?
Yeah, or like seeing Mike Novogratz get a tattoo of like the Terra logo on his shoulder. Um, that's a good question. How much of it was just like people having some spidey senses about things getting too frothy and bubble-like versus like an actual understanding of the flaws in the design mechanism for UST or Anchor? I would say, I mean, it's hard to speculate. There's definitely a portion of people that were, I think, overall for the entire economy, all risk assets. There was obviously a lot of people at the time that were like, something's off. Um, I mean, you famously had like Bezos and Elon Musk selling. I think it was in like the end of 2021, if I'm fact check me on this, but I think they had both of those guys had done like huge sales of their stake in Amazon or Tesla, and there were a lot of pundits at the time, like the all-in VC group, just kind of calling out that this was like a potential top signal, and like if these guys are selling, like what do they know that you don't know? So there's definitely some of that, but there was also a surprising amount of, I think, even amongst retail users, like at least an understanding that the UST, the anchor earn rate, was unsustainable. That was pretty easy to grasp. Like you could just look at the amount of money sitting in the account that's paying this thing out versus how much UST is locked in anchor earn, and then like you can just there was a very easy like you could calculate there's 100 days worth of yield left or whatever. Um, and it didn't seem like TFL was being like aggressive enough to cut the rates. So I feel like a lot of people like since that was an issue, but you could both hold the belief that you could both hold the belief that anchor earn was unsustainable and also still be bullish on the ecosystem at large. So that wasn't really enough, I think, to like fully spook people. It was the smaller group of more analytical skeptics who I think within that group there was also a camp that were purely just based on the fundamental design had issues with UST, and there's another group that was like, this is exploitable. You could gain by shorting UST. Um, and like those two camps kind of like were together fudding the like overall design mechanism.
Yeah, and I did like I remember back to that time and I remember it was like a very common occurrence to like be on crypto Twitter having a conversation and like you would get to Terra and then like immediately both people would be like Anchor not sustainable. This is going to run out. Check, check. Okay. We've put that in a box. Now we can both safely say that like because we've addressed it, it's no longer a concern. Let's like continue the conversation. And like, I don't know why just TFL and just Anchor got that treatment.
It was pretty crazy. Like I mean, I'm probably slightly biased here just because of my exposure, but I felt like Do Kwon was probably one of the most effective cult leaders in like the entire history of crypto, more so than like Vitalik or CZ ever was. I feel like he was able to, he was so crypto native, he was so active, he was so like laissez-faire about what he said that it was sort of like the Elon Musk of crypto in many ways. And as a result of that, you had a very, very, very loyal following that would overlook some pretty obvious shortcomings.
So what do you think about Do Kwon? And of course, like nobody like can really speak about it, but like your understanding based on how everything played out, like, and let's not talk about Do Kwon specifically. Let's talk about TFL as a whole. Like, how much do you think they understood that this was like one of the most high stakes games of musical chairs ever invented, or how much do you think that they were true believers?
Yeah, and so like to answer the last part of the question, like how aware of they were of the like potential risk. So I don't actually have anything like firsthand that I think gives me more insight. We're very far at the end of the day, like Aperture is very, very far removed from the inner thinkings of TFL. Um, but like just based on my speculation on like what is public knowledge, I think they at a very minimum realized they were vulnerable to like a short sale type of attack, and possibly also sort of aware of the general death spiral potential of UST because there was a lot of effort to like build up this defense fund that had AVAX and Bitcoin and ETH and like other like quote unquote blue chip assets in crypto that they would use to backstop the backstop Luna and UST. Um, and like they were doing quite, I think there was like even more plans to like that backstop was supposed to be bigger. Like they were like pretty aggressively trying to ramp it up, and they just kind of were like too late in the game. So my speculation is that they were like bullish on the ecosystem, but they weren't totally stupid. I think they did, you know, they have tons of incredibly smart people around them, and they were somewhat aware of the risk. So I think there was um, a decent amount of awareness of like what could go wrong. They were just too slow to act, in my opinion.
Yeah, and I'm not going to ask you to like comment on if Do Kwon is like a good faith actor or not. Like, I think to even categorize like that is to like miss an important part of human nature. But I do think it's probably fair to say that, like, regardless of what you think of Do Kwon, that project just like it grew so much faster than it should have. And like, yeah, maybe some smart guys realized once it was like a $40 billion project that like this isn't safe, but it was just too late at that point. And, if anything, like you could make the argument that like building up that defense fund, like sent the signal to attack now before it's too late.
Yeah, that's a good way to look at it. There was also some like executional mishaps that they had when UST initially, like the very beginning of the DPEG that killed them was because there was a temporary like blip in liquidity as they were migrating. I think they were moving liquidity onto Curve or off of Curve to somewhere else. I don't remember exactly the order of events, but they did not do it in an atomic transaction. It wasn't like the liquidity immediately show up. There was a gap in the blockchain time where liquidity was a lot lower, and that was when the attack happened. Um, so one could also speculate like what would have happened had maybe it was still inevitable Maybe it just would have bought more time, but uh, there were some executional mishaps as well. And yeah, it's a good point. Like they were very public about announcing the backstop. Like to what extent did that also put them in danger? Who knows?
Yeah, no, for sure. So earlier you kind of like gestured that that the collapse of Luna like was more important than just like the collapse of this like very large protocol and all the retail that was like directly exposed to it, because like it turns out, and we all didn't realize this until it was too late, but like basically every large player was like playing in that ecosystem as well. And so you brought up Celsius. That's what I want to talk about right now. But like as we go into this conversation, I think it's important to recognize that like Celsius is one example of somebody who like really, really fucked up. And like that we you know, we'll talk about how that ended out, but like everybody was doing this. Everybody thought that like this, like, yeah, we understand it's not safe. We've addressed that we're going to run out of yield, but like because we put it in the box, move forward. Like everybody from SBF to Alex Mashinsky to you know, like very reputable people, Galaxy, the Winklevoss twins, like everybody was in there. So I want to start this with the like the understanding that the story we're about to tell about Celsius is not a unique story. It like really can be told again and again through every other protocol. But with that being said, can you tell us a little bit about like, at least from your understanding, like how did Celsius, which essentially just takes Bitcoin or whatever crypto and lends it back out, like how did they even find themselves in this situation where they're playing again the most high stakes game of musical chairs ever invented?
Yeah. So I'll start off by confessing I don't actually know the exact set of transactions that Mashinsky took that got Celsius in trouble. That whole part of the story to me is I've never gotten like a very clear answer. But I can speak to like what we saw at Aperture working with a particular team at Celsius that was responsible for managing their DeFi book. Um, and the funny thing about that team was they did incredible due diligence. They were very smart, very thoughtful, and seemed like truly like a very like blue chip uh like prop shop sort of team operating this massive book on behalf of Celsius. So you contrast that with Mashinsky, who like I watched some of the live. I had money in Celsius as well, and I watched some of the like there's like AMAs they would do once a week, and those things to me always that was where I got the sense of like there's something off about this. Like his wife is on this AMA. They're like showing random customer service people. They're like trying to like overhype this like sell token burn thing they're doing. I'm like, what? Like, but at the time, I'm also like new enough to crypto, and you know, everyone's kind of still drunk on the bull market that I'm not like putting A and B together. But now, like, if I saw something like that going forward for the rest of my life, I would immediately be like, nope, I'm like not touching this with a 50-foot pole. Um, but yeah, I basically my comment overall on Celsius is that the there were clearly some like inexperienced people in that company, but the team that was actually deploying on the on the DeFi side was very competent. Um, to the point of they could do their own smart contract audits on a chain like Terra, which is you know has some nuances. It's not just like a standard EVM chain. It was still pretty new back then. Um, but yeah, the team was incredibly competent, very like cautious. They like would do test amounts of capital first, and then would slowly scale that up. Um, and I think like at the time they had gotten up to like 10 million worth of UST into this like Aperture vault, and were telling us they were targeting like 100 million or more. Was the kind of their end goal if like they thought the like strategy itself could even hold that much capital. Um, but as we've now come to see, like somewhere else in the company, someone was like deciding to put rates on UST that were not sustainable long term. Because I was seeing like one thing I could kind of speculate is like they were offering like UST rates that were slightly above anchor earn for quite some time, and like the expectation would be that they need to be taking a cut. Like I wouldn't expect them to be like fully passing that rate through to the users, and then furthermore the rate was above that of anchor earn, so I'm like, okay, then they were definitely doing other stuff where they were rehypothecating the UST to some other market. Um, so there was definitely some breakdown within that company. But I would say like not the entire like I would similar to FTX, there were tons of very competent people working inside that company that kind of got fucked by some bad decisions that were made at the top or in some other department.
Yeah. So let me tell me if this is fair from what you just said, that like from your actual work with the Celsius team, like you were impressed. Like these guys knew what they were doing, and like you sounds like you still only have good things to say to them.
I would say to even go a step further, we were actually taking advice from them on what vault to build next because they had such a deep and nuanced understanding of which sort of structured products could be built across DeFi anywhere, Solana on EVM chains or elsewhere in the Cosmos ecosystem, that we were actively like getting them to tell us what should we productize next. And their advice there was like incredible. Like they had like some of the best knowledge of like what strategy could hold the most amount of capital for the longest amount of time that would justify building a vault. So yeah, very impressed with their team.
So you're super impressed with the team, you're working with them, and then like you're watching AMAs or you're watching YouTube or maybe you're going to conferences and you're saying Alex Mashinsky, and there's something there where you're like, the work that I'm doing doesn't feel like it's the same company as like what I'm saying in front of you. And like, unfortunately, like we all learn this at some point in our life, like our gut is actually like smarter than all of us and is trying to tell us something, and we all ignore it the first time and then we never ignore it ever again. But I guess like with this understanding that like you have so much respect and like admiration for the Celsius people, like can you talk sorry, the Celsius DeFi team. Can you talk a little bit about like that moment when Luna is blowing up? And then it's like pretty shortly afterwards, like within a month that Celsius like the game's over at Celsius as well. Like working with them, like what was it? What were their reactions like? Were they reacting in a different way than you expected because like there was other things going on? I guess like take me to the like this like catastrophic moment, and like what was it like working with the Celsius people?
Yeah, so I don't know. I don't have any specific memories of what our communications were with the Celsius team, but one bit of history that I think kind of got swept under the rug a bit in this whole story was that when UST depegged, it became we sort of realized at that moment that there had been an exploit in Mirror that had happened many months prior. And there was like basically a contract that held like the collateral for the short positions, something of this nature, and that contract had been drained. And so the way people had actually been withdrawing from Mirror was like just based on new capital coming in. A
A
lot of the
literal
like
Ponzi.
a literal Ponzi, yeah. And because there was just enough new capital coming in, there was never an issue withdrawing. It wasn't until the entire thing needed to like revert to zero that we realized there wasn't enough money in that smart contract, not enough UST in the smart contract. And so what happened when the DPEG everyone's trying to flee Terra. So exiting Anchor Earn, exiting Mirror, exiting the Aperture Vault, and the way the exiting worked was basically like if you were a super large position, you were fucked. There just like was not enough liquidity possibly flowing in to help you out, but there were enough like speculative people on the other side that were like depositing UST into the vault even as things were going down. There was a period where like people were buying the dip, right? Like it took like well over a week before it was kind of inevitably doomed. And so those it was those people that were providing exit liquidity for basically smaller retail users, because it was like 1,000 here, 5,000 here. It was never like 7 million worth of UST that was coming in. So Celsius and all the other larger institutional users of that vault were just like, they were totally SOL. And we did have, this wasn't Celsius, we did have this other, there's this other gentleman, I won't like name his fund or who his name, but he had like set up um this company that basically would like invest like the treasury of like some traditional non-crypto company that had like a bunch of cash on their balance sheet, and he would basically like tell them like, hey, I can get you 15% or 20% on this cash, just like give it to me. And he was literally just like taking those dollars from their treasury and like on ramping into these like DeFi strategies, one of which was Aperture. And um I'll never forget, we got an email like sometime during that like the DPEG week, where he was basically just like, dear, my name and our CEO's name, like, I'm so fucked. I've lost all my investors' money. I don't know what to do. I think my career is over. I think I'm legally in like a world of shit. That was like sort of verbatim what the email was, and we were just like, oh my God. Talk about being caught with your pants down, like when the tide goes out. Like that was um pretty awful to see that. And it was those sorts of people that I feel the worst, I feel for the most. Like the degens that had 10K, 50K, 100K, caught up somewhere in like some UST based strategy. Like those people, like, yeah, whatever, like, that most of those guys were playing around with money that was made on the back of that like incredible bull run. So I don't feel as bad for those types. It was the people that had like, I mean, what was in hindsight like an incredibly stupid business idea, had set out to like bet the house on UST. Those are the ones who I think, that's like a major type of event. Like, Aperture, we ended up taking a hit to our treasury. We got out of UST at like 72 cents on the dollar. Painful, sure, but like there's still money. Like we were able to keep building. We're still alive, well over 2 years later, and thriving and doing quite well. So, despite the fact that we still had posted a pretty big L, it's not as bad as some of these people that had sort of like bet the house.
No, man, I totally feel you. And I remember back in 2022 when this started, like, when Terra went down, it took my bags with it, which were nothing to do with Terra, but were ETH and Bitcoin and all, just everything went down. And I remember my first thought was like, well, this is what I signed up for. And like every single tweet I see on Twitter, it's just like, you whiny fucking babies, like, welcome. And then like all of these stories started coming. Like the story you just told is like definitely sad, but I'm also like, well, you kind of were like a little bit doing fraud there, so suck it. Like your chickens came to roost. But like there were just so many stories that immediately came out about like people that had built like consumer savings apps or just like payment apps, or like just so many people that didn't even understand that crypto was like invented, like lost money in this. And like that's the thing where like we all need to sober up about.
Yeah, it's actually the number of companies and products that were purely built on top of Anchor Earn 20% at the end of the day. Like the number of names on that list is like shockingly large, and the amount of money that those projects raise is not trivial. So just like seeing all those companies get nuked at the same time is insane.
Yeah. And so I guess like final point of conversation on like Luna, and like so depending on like who you are and like you hear what happened as described as like the collapsing of an unstable mechanism or an attack on a vulnerable mechanism. And I guess like I just want to hear your perspective as someone who was like building in the system, really understood it, like, and had capital at stake and lost from that. I'm sure like you were paying attention. Like, what did actually happen here to turn the music off and start the scramble for musical chairs?
Yeah, like what was the mechanism by which it died on?
Yeah, and like you said this, like maybe it always had to happen. Like I don't know, maybe we could have survived. Maybe it always had to happen. But like it happened this way. And my question is like, well, what did happen?
Yeah, so it's hard to orally describe the algorithmic stablecoin mechanism for UST, but the like for any listener out there that I guess wasn't familiar with the general setup, I recommend you Google it to read about it. But basically, the gist was that UST never had a there wasn't like an account holding dollars that was one to one with UST. UST was minted from Luna. Like the two assets were inextricably linked, and there was a conversion you could do between UST to Luna that was always kind of like set at a certain price. And if the market rate for either of those assets deviated from that price, you could just arb it. And there was always people just arbing like the market rate, by doing the direct conversion between UST and Luna. Um, and so that's all fine and dandy if if either of the assets is still worth something. But if one of the assets is worth nothing, then that arb and the whole process kind of breaks down. And that was essentially what happened. Was like, if the value of UST started collapsing and the value of Luna also started collapsing, which meant that Luna could not be used to like repeg the price. And Luna could also like mint. There's just like this infinite mint structure where like Luna could be continually be minted to like cover UST, which sort of meant that like the price would just further go down if there was no market demand to buy Luna. So it was basically just a case of like both assets go down very fast if there's no demand for either of them.
And super clear how like this mechanism allowed for this to happen, but like is your understanding that in this moment when like liquidity was pulled out of a curve pool to migrate it to another curve pool, like did SBF come in and just like hit the short button and start this death spiral? Like was there a third party actor that like launched an attack, or like was this just like somebody broke first, and like once somebody saw the first person running, the second person running, the third person, and then the stampede started?
I think the general consensus on this is that it was a third party actor that strategically struck when the liquidity was at an unusually low point and sold a shitload of UST. There's probably, I think, like I've seen people talk about, there's just like a handful of firms that could have done this. It's one of the big players from the 2022 cycle, most likely. We don't know which one exactly. Maybe like Arkham or someone has kind of deduced exactly who it might have been, or has like a more data-backed theory. But yeah, my understanding is it was definitely an attack. Someone wanted to profit from shorting UST, and they placed a pretty large bet. Like it was still a like very, very large sell order of UST that triggered like, people then to start panic selling. And of course, this is all timed alongside like a Fed announcement about like rates coming up and inflation. And so the whole economy was quite vulnerable. It was very easy. Like, there's a lot of dry timber, and like any match could have started this fire, so to speak.
And then we haven't really talked about it, but the other thing that's going on in parallel throughout this time is like the great collapse of the GBTC trade. So for those who weren't around, essentially there's the Grayscale Bitcoin Trust, and for a while you could mint these shares, and the shares were trading at a premium over Bitcoin. The reason why is not relevant, but there were a bunch of firms, specifically Three Arrows Capital, that were just realizing they could just run that play over and over and over and over again. And they made a ton of money. But the problem is eventually that premium flipped and was no longer a premium. It was like a negative amount. So one share corresponded to less than the equivalent amount of Bitcoin. And like it is hard to overstate just how much capital was locked up in that trade. And so I guess my question for you is like, is your understanding that whatever was going on with Three Arrows Capital and GBZC, was that like a direct stressor and a direct component in what happened in the collapse, or was that more just part of like the macro background news that like you're talking about when you refer to like, you know, the S&P frothiness and the billionaire selling major stakes?
Yeah, I don't remember the exact timing of all these things. But my memory was always that like Luna was really the first domino that fell, if I'm remembering correctly.
Yeah. Okay. Yeah, no, makes sense. And then you know, I think we all know what happens from there, which is like Luna collapses, then we have the first wave of crypto bank failures, but SBF is like our Rockefeller or our JP Morgan and says like I am going to bail out all the crypto banks and make sure that this industry survives. And then we find out 6 months later that the reason he did that was because he had like a bunch of fraudulent loans and stakes and whatever. And if everything collapsed, then like FTX would have collapsed. And so I think yeah, like that is the story of like what ended the party in 2022 and like basically the story of the 2022 bull cycle. But yeah, so man, such a wild story, and I'm so happy that you shared it with us. So I want to spend the last 10 minutes talking about like what's happened to Aperture since and like where you guys are at now. But before we go there, do you just have any like final reflections or thoughts or even stories that you want to share about that crazy May in 2022?
I guess one final thought for me is that like for anyone out there who's familiar, like now that it's 2 years later, no one's touched an algorithmic stablecoin. That idea has not garnered any traction. Um, and there were a lot of projects that had algo stablecoins that like basically like undid that design mechanism to have it be fully pegged for good reasons. But like I did see something quite recently that I was like, the cycle's starting again. Which was with the announcement of Athena, which for anyone who's not familiar, Athena launched this basically it had tons of blue chip investors. All the major centralized exchanges have invested in them. There's a reason why. I'll get to that. And including some like very, very blue chip VCs like Dragonfly were in the round for Athena. And what Athena has basically done is created a stable coin that they quickly retraced and have decided not to call it a stable coin, but it's called USDE. Like the name of it is very stablecoin-esque. You're not fooling anyone if you try to like call it a tokenized vault asset or whatever their marketing name for it is. But the way this thing works is it like really reminded me of Aperture and our vault in 2022, which was this delta neutral vault. And basically, Athena has made a delta neutral vault using a different kind of finance play called the cash and carry trade, which the way it works for Athena is basically there's a lot of demand right now to go long on futures markets, on centralized exchanges, or on-chain places like GMX, DYDX, etc. And what it means is that if you want to short the assets on that chain, you can collect a funding rate for doing so. And you can be quote unquote delta neutral if you simultaneously have an equal amount of long exposure to that asset. And so you just basically collect the spread for the funding rate. The longs pay the shorts, and everyone wants to be long right now. And so Athena has basically created this like on-chain, off-chain, like hedge fund vault that they've turned into a stable coin. That's supposed to be equal, it's basically this thing that's supposed to be equal 1-to-1 to USDC or USDT. But if you stake it, you get this yield that's like somewhere from like 20 to upwards of like 60%. I think like this week it's been around like 50 to 60%. And this is all fine and dandy, except when the funding rate flips and people overall want to be short assets, and then now like this whole thing kind of breaks down. And Athena has claimed they've done some like similar hand wavy like, oh, like in our back tests this was only ever an issue like for like 3 weeks over the past 2 years, and based on our understanding this would be totally fine. And just anyways, all of this, there's lots of great FUD out there if you want to read about people like myself who had a very like knee-jerk reaction to seeing this thing come to the market. Um, it reminds me of UST, to be frank. Like, and my thought is like, wow, this is really just going to come back every cycle. There will be some kind of someone who just like pushes the edge a little bit on what is like sustainable and viable, because they can tap into just the inherent like the greed. Like the crypto core audience right now is just inherently a much more like greedy risk on audience than any other subset slice of humanity. And until that overall, until we have a lot more users on chain that can kind of like rationalize the whole ecosystem, I'm like, yeah, we're gonna keep seeing this stuff. Maybe Athena works out, I don't know, but like it could very well. There's a very plausible path to that thing like blowing up and depegging to zero.
So without like what are the echoes of Luna that you see in Athena? Let me guess, and you tell me if this is right. So one, like too much, like suspicious amount of institutional buy-in by like blue chip people, like too many people getting way too excited about yield that's obviously unsustainable, and a mechanism that like seems viable on paper but like has this like one weird scenario where if it happens like the whole thing falls apart. And it feels like those are the three ingredients, and then you layer on the mania of a bull run that like creates the Terras.
Exactly. And I would even go a step further, like um, this doesn't apply to Dragonfly. I think they're truly bullish and believe in the product, but the centralized exchanges, if I was being a little bit cynical, if you're Binance, even if you cut a check for like $3 million, $1 million or so to put into this like early stage DeFi protocol, even if that goes to zero, Binance, I'm pretty sure will make much more than that um, on their futures product if it's very, very cheap to go long on Binance, which is what they want. They want someone to come in and like arb this funding rate as close to zero as possible so that it's even more cheap for the core users of Binance to go long. And I suspect for them it was some pretty easy math to see that like, oh, even if this Athena token is never worth $1, like we could probably greatly profit from this in the short run by just having better pricing for our futures product. Um, and so yeah, like you said, I think that it's 100% the ingredients for things to go wrong. We have bull run mania, we have blue chip institutional investors, we have frothy yield, and we have just one little design flaw that could send everything tumbling to zero.
Woo! All right. Well, let's walk away from that very scary conversation and end on a high note. So, McDavid, you told us this story of like Aperture, like literally entering the inferno, and like you've gestured at this a few times that like you walked out the other side and like made it through the last 2 years, still building. So, I guess like now in March 2024, like there's no there's I guess there is, but for all intents and purposes, there is no Luna chain. There's no anchor. Like the things that you were building before just don't exist. So can you just talk to us about like what was the journey to get from like walking around the wreckage to where you are at today, which spoiler alert is like building products for Uniswap?
Yeah, so we basically, our kind of journey post Luna was like a flight to safety, which wound us on top of Uniswap, which is one of the oldest, longest standing unhacked protocols within DeFi. And yeah, what we do today at Aperture, basically we use solvers to help the LPs on Uniswap v3. And shortly we'll be soon to be announcing other concentrated liquidity dexes that we'll be deploying on as well. And basically, like if anyone who's LP'd on a concentrated liquidity dex, the actual like management process for those positions is very, very tricky and cumbersome. And so like what you can do with solvers is basically just have a much simpler user experience, but also get some like better pricing and execution on some like really basic concepts like rebalancing or moving the range of your liquidity position from like point A to point B to from point C to point D. Um, and yeah, and that's what Aperture is today. We've just launched a points campaign. We're gearing up to TGE, almost 2 years post uh, USC Death Spiral. We're hoping to TGE here at the end of April. And where we're going from here, like in the future, is like kind of further. So I mentioned solvers, like we are in the kind of intense space, and our kind of grand vision is to build out some more generalized intent infrastructure uh, that will be from the user's experience. Your interaction with the front end will actually be through a chatbot, where you will kind of like basically work with the chatbot to figure out what your declared intent is going to be, and the chatbot will help you translate that intent into a highly readable language that can be posted into a mempool for solvers to look at, to compete on finding the best solution for whatever DeFi action it is that you want to do. And yeah, so that's where we are, where we're going. It's been quite the journey. We've, really tried to get out of the space of selling APR and selling yield, and just instead giving people like, world-class execution and tooling to go out and do something very conservative or do something very degenerate. It's up to you.
That's a super cool frame. I love that you're getting out of the business of selling APR. And you didn't say this, but let me try it out. You're getting out of the business of selling APR and you're getting into the business of providing functionality.
Exactly. Yeah.
Cool. And I just I'm the biggest believer. I understand why literally the only thing we can talk about in crypto is money and finance. And that's a huge part of our history. And it's a huge part of just crypto economic security is inherently about money. But I am so confident that in the long history of blockchain, this is technology that's meant for other stuff other than saving, trading, and speculating. And so I can totally see this world that you're talking about, where Aperture is starting with we're going to use solvers to do the Uniswap thing, and then we're going to grow to different DeFi protocols. But the second you said you interact with a chatbot to help make your intent, what I'm seeing is a world where these solvers and these intents aren't just about how to do financial operations. They're about really what do you intend to do on the internet, and how can Aperture help that happen. And so that's the future that I'm super excited for.
Yeah, likewise. I mean, I'm also very bullish on a future where almost all of any kind of complicated decision we have to make that involves allocating a resource, so usually money, will be kind of managed through this chatbot interface where you can work with some sort of smart agent or solver to get you much better pricing or execution. I mean, the obvious example is travel. I spent an hour earlier this morning trying to book a flight. I had a specific budget, and there's some other constraints, and it was just the amount of little mini decisions you have to make on that journey is still mind-boggling for 2024. And I think, I look forward to a future where, we offload a lot of that computational load to our, AI overlords.
Awesome, man. Well, I could keep going. There's so much to continue to unpack about the history of how we got here and Aperture and all the exciting stuff you're doing. But for the sake of your schedule and everyone's attention span, I will cut us off here. So, McDavid, thank you so much for coming in and taking the time to just talk through perhaps hopefully what will be one of the most traumatic things in this industry, and really help us think through what do we need to take away from this? What do we need to be looking for? And what can we fix? What doesn't need to happen again? So just again, so grateful, so thankful. McDavid, thank you for coming on the show.
Yep. Thanks for having me.
Of course. And before I let you go, can you just share with the audience if they want to find you or they want to find Aperture? What's the best way to find you guys?
Yeah, I mean, Aperture, we're Aperture Finance on Twitter. And you can find me on Twitter at Rob MC Stodda, Stodda. Or I'm at McDavid on Farcaster, if anyone's doing that.
Cool. Yeah. No, the best part about Farcaster is we were all able to get the names that we wanted.
Right. Right.
Yeah. All right. McDavid, thank you so much, and have a great rest of your day.
Sweet. Take care, y'all.